This is Eric Mother with Mother.com for the weekend market analysis for March 23rd and 24th, 2019. Let's take a look at markets here with about 2 minutes to go before the close. We'll see how things settle out because they might affect some of the levels we were watching as of last weekend's market analysis video. All right, we can see here, for example, if we take a look at the S&P 500, we can see one of the levels we were watching was this daily closing high right here. And the level we were watching was 2803.69 on the SPX, which is this daily closing high. So depending on whether or not we close above or below this level, that might give us some indication of what this pullback means. Of course, if the market can hold and sustain above this level, then we can say that this is a retest of this breakout. Holding above that would be good. And if the market would go on to fail to hold that level, then we start seeing signs of cracking in the market. So pretty much depends on how we close, where we close as we come close to the end of the week. And of course, going into the new week, depending on whether we can hold back above those levels, is going to determine the next meaningful direction. For now, the way things are shaping up, we'll see whether we close above or below that level with a couple of minutes to go here. Let me just get the bell. Here we go. So there's the close. As the numbers settle out, let's continue on here with our analysis. So what I'm going to do here, let me update the S&P 500 daily to see what the closing price is going to be or close to it. So let's go here, draw our breakout line. And then the number we are watching there. And again, if the market can recapture this level, even as of next week, then this can still be a retest of the breakout. So it's not like lost just because the market is 3 points below this level at the close. So right now we can say net without knowing what the future brings. This is looking like a shallow failed breakout. But you know, failed breakouts are notorious for taking instruments lower. And an example of this is here, where we see a breakout attempt that failed. So, you know, it always starts somewhere. Now, if the market can recapture above this level, then, you know, it's all good. Our movement back above this would indicate recapturing the level, and that would still be okay. Again, so just to summarize here, as we had discussed even in last weekend's market analysis, anything above this price should be net bullish and positive for the market, and anything back below this price, as we are seeing right now, does begin to ask questions of the market's intent. And the more we drift away from this number, the more the indication is that the next meaningful direction is lower. Of course, there's another level to watch, which is this previous daily closing high that became a breakout level. The market did break out above that level successfully. In fact, we can say that was a nice breakout, and the market came back and tested it and found support here. So that level is legit. The market is very aware of that level. And so let me give you that number again, 2737.70. So anything above this, and as long as S&P 500 is holding above this number, this remains to be a constructive market, stable at the very worst. Now, if we go on to break below this level, that's a serious material breach. So anything back below this would not be good. Indication there would be this market is due for continuation of this recent pullback. By the way, we can see here, it is not unusual for pullbacks to begin when a market is rejected around the 69.1 level, which is what we are seeing here with the S&P 500. And the opposite of that is if the market is held, or the market finds support, I'm trying to say, at the 30.9 level, that can also be constructive. So you see two examples here. RSI 30.9 support with uniform action for the lows here. Looks like RSI 69.1 rejection. This might be a short-term intermediate high, if not a major high, based on the long-term weekly and monthly charts look. There's gonna be some links in the description of the video that explain where I get these numbers from. During last weekend's market analysis video, I discussed the S&P 500 weekly chart, and one of the lines I was discussing has some relevance in the current market. Of course, the market can always clear resistance, but here we can see a visual example of where we are. There is a double top here and a double top here. Why are these important? Well, on this chart, we can see that the two periods where the market has a substantial drop in terms of visually, this is one of the periods where the market had a sizable drop. The other one is this shallow one here. In fact, we can even say this recent pullback of 2018 highs is a third area. So what I was discussing with you is we can see here that this is corresponding in this break here with a trend line break, another trend line break here, and the two lines are pretty much at the same level if I draw it like that. Now notice again how we break below this level here, and now, and this is the point I'm trying to make, as long as the market is showing this double top, this is a visual problem for the market. So the more we drift away from this level, the more it becomes critical that the market could actually be looking to move lower. In other words, the more we drift lower, that's not a good sign. And if the market is to retake the previous highs and move higher, in other words, if the market is to come and test these highs, it would need to move above the red line. So visually, this is where the market needs to decide. Resistance here suggests that the next meaningful direction is going to have to be lower. Otherwise, a breakout is needed. Just like we saw a breakout, let's say here, above the area for this entry before this perfect market rally in 2017. So resistance means down, breakout means higher. Now, here's a conclusion you can see for now, without knowing what the next couple of weeks are going to bring in the market. We can see we ended the week with this resistance here. So for now, this is what we have to take into the weekend. That right now the market is showing resistance. Until we see anything different, chances are this market is stalling around here with the probability that we are shaping up for a substantial move lower in the weeks and months ahead. Otherwise, the bulls would like to see the market clear this current weekly resistance. Now, this concludes the free portion of this video. The rest of the video is for paid Moade.com subscribers. Enjoy your weekend.